a Florida city once booming with cash buyers and bidding wars, is now drowning in unsold homes, collapsing prices, and desperate sellers. And no one saw it coming this fast. Just 2 years ago, Fort Myers was one of the hottest housing markets in the country. Now, it's unraveling faster than anyone expected. Prices are plummeting, homes are sitting unsold, and nearly 8% of owners owe more than their property is worth. How did we get here so fast? And could this collapse spread even further? Let's dig into the storm that's hitting Florida's Gulf Coast, and why it's more than just a local disaster. From boomtown to bust. It all started with a migration wave no one saw coming. When mortgage rates dipped below 3% in 2020, buyers from New York, Chicago, and Atlanta poured into Florida. Fort Myers was flooded with remote workers, retirees, and young families, all chasing cheap credit, sunshine, and a fresh start. Home values surged by nearly 40% in just 2 years. Lee County approved thousands of new units. Builders couldn't pour foundations fast enough. Out-of-state buyers were making cash offers, sight unseen. For a moment, Fort Myers felt untouchable, but that momentum carried a warning few paid attention to. The cracks begin to show. By early 2023, the tide started to turn. Inventory ballooned, prices stalled, then started to drop. In just 12 months, the median sale price in Fort Myers fell over 13%. The average home now sells for about $313,000, down sharply from pandemic highs. Back in 2021, homes lasted 2 weeks on the market. Today, many linger for 3 months or longer. What was once a seller's paradise is now a waiting game of price cuts and buyer hesitation. But the bigger shock wasn't just price. It was cost. The hidden force, insurance and affordability. Hurricane Ian didn't just leave damage behind, it triggered an insurance crisis. Before the storm, annual premiums were under $2,500. Today, many homeowners are paying over $6,000, with some waterfront properties getting quotes above $20,000. And it's not just expensive, it's unpredictable. Some buyers walk away from deals because insurance makes monthly payments impossible. One buyer saw their premium estimate hit $24,000, almost as much as the mortgage itself. Even with prices dropping, the cost to carry a home is up 44% since 2022. That's pushed first-time buyers out and left long-time owners struggling to stay in. Oversupply and investor retreat. Meanwhile, the market flooded. In 2023, Cape Coral and Fort Myers had around 5,000 listings. By spring 2025, that number hit nearly 15,000, triple the inventory in just 2 years. Neighborhoods built during the boom now sit half full. For sale, signs stretch down empty streets. Builders have slashed prices by $50,000 or more and are offering closing credits just to move inventory. Investors who once flipped homes for quick profit are offloading at a loss or sitting on vacancies they can't fill. Each week, more listings go up. Fewer offers come in. And now, even the experts are spooked. Negative equity and the shift in power. For anyone who bought at the peak, the numbers are brutal. Let's say you bought a home for $400,000 with a small down payment. Today, you could be looking at selling for $361,000. Meaning you'd owe the bank $20,000 just to get out. Nearly 8% of local homeowners are underwater, the highest rate in the nation. Buyers know it. They're bargaining hard. Some are demanding roof repairs, closing credits, even prepaid insurance. And they're getting it. The average offer comes in 10% below asking. More than half of all listings have seen at least one price cut, some as many as 3. For sellers, it's no longer about profit. It's about survival. The collapse beneath the surface. And it's not just homeowners feeling the pressure. Small builders are folding. The Windrest development, once a symbol of Fort Myers's boom, now sits half-built. Equipment sits idle. Subcontractors are chasing unpaid invoices. Rental vacancies have spiked above 12%. Complexes that used to offer waiting lists now give out 2 months of free rent. Construction workers who were once booked months out are now job hunting. One drywall company that used to turn work away now posts daily discounts on Facebook. The whole local economy, once driven by growth, is now struggling to tread water. Could this spread? This isn't just about Fort Myers anymore. Foreclosure filings in the area have doubled in the last year. Governor Ron DeSantis has pledged aid and reforms, but many argue it's too late. Other cities in the Sun Belt are starting to flash warning signs. Austin, Raleigh, even Phoenix. Inventory is rising, prices are softening, investors are pulling back. Analysts say the same pressures, overbuilding, speculative buying, rising costs, are playing out across the region. And if Fort Myers is the test case, the rest of the country should pay attention. Fort Myers is no longer a booming success story. It's become a cautionary tale. The dream of easy Florida living collided with the hard truth of rising costs, speculative risk, and policy decisions that ignored the warning signs. Now, families are trapped in homes they can't afford, builders are backing out, and a once thriving market is grappling with a slow-motion collapse. So, what do you think is really going on? Drop a comment below. Are you seeing similar trends where you live, or is Fort Myers a one-off? Be sure to like this video and subscribe if you want clear, straight-up reporting on real estate, economics, and the stories behind the headlines. No sugarcoating, no spin. Just the facts that matter. Because when markets shift this fast, the only safe move is staying informed.